Hi, we are in the fourth quarter of fiscal year 2024. Third quarter result has started coming in. I would say more than 50% result has already been declared, and we have seen a few good results, few bad results, some flat, some decent results as well. In this video, rather in a series of videos, I will throw some light in various sectors and the stocks in the sectors in terms of Q3FY24 result, means December quarter result, how the December quarter result for various sectors are coming out. Uh, so it will be easier for us to build a consensus how the sector is going to pan out in near future. So let's start quickly. So today in this video, let me start with the most desired agrochemical sector. Agrochemical sector is in focus for quite some time because we know for last few quarters result is for agrochemical companies are not good at all. So let me have a quick look into this Q3 result of those agrochemical companies. So I would like to start with Rallis India. Rallis, a Tata Group company. This quarter, their result, I would say, it was a flat to decent kind of result the company has posted. Their sales was a little bit down, around 5% down year on year basis. However, they did well in at the EBITDA level. EBITDA grew 17% year on year basis, a decent one, and EBITDA margin improved almost 200 basis point at 10%. You can see the snapshot in the screen, and bottom line of the company grew 9%. This was the only decent result as of so far, who are the core agrochemical players. Next is United Phosphorus Limited, UPL. UPL's result was a concern, a big concern. Sales was down 28% year on year basis. EBITDA was down to 67 crore only versus 2884 crore last year same quarter. 2884 crore last year same quarter. Let me make the screen even bigger. So last year same quarter it posted close to 2900 crore profit. Now it is managed to deliver some profit at the EBITDA level, that was mere 67 crore. But the bottom line turned negative. Previous quarter we have seen 290 crore of loss at the bottom line. This quarter they have posted 1600 crore of 1607 crore loss at the bottom line. Next comes Sumitomo Chemical. Sumitomo has also disappointed. Its top line was down 28%, EBITDA fell 45% year on year basis, EBITDA margin squeezed 400 basis point at 12%, and bottom line fell 39%, net profit fell to 55 crore versus 91 crore last year same quarter. Godrej Agrovet, although it's not core agrochemical player, but yes, that is in this particular segment only. So its result was decent, I would say. Top line was flat at 2345 crore. EBITDA grew 17% year on year basis at 159 crore. EBITDA margin also improved almost 100 basis point at 7%, and the bottom line fell 28% year on year, although till EBITDA its numbers were decent. So altogether I would say it's a decent number. Now the question is, Rallis had a flat display. Sumitomo and UPL badly down. Bear crop posted good set of numbers. Let me tell you, Bear crop's top line was down 8%. EBITDA grew, jumped 50% at 128 crore. EBITDA margin also improved almost 500 basis point at 13%, and net bottom line also jumped 53% year on year basis at there is something wrong in this figure. It is if it is 93 crore, then its uh, bottom line has fell. Okay, I'm not getting into it. I will check it and update it accordingly. So far, Bear Crop looks the best one in the pack in terms of its performance, but please don't consider it as any buy, sell, hold recommendation. Neither of the stocks discussed here are buy, sell, or hold recommendation. And also, like a company is giving good result this quarter. Like just on the basis of a good number, taking a call is not the right decision. This is my understanding. A good performance, if you'd say okay, let it sustain for quarters after quarters, so most of the time we have seen companies perform in cycles. So if the cycle goes out of your hand, then you will be trapped on the wrong side. So my understanding is, if you can anticipate now the things are going to be improved, now things are going to be sorted. Result was not doing good, but it's the time to turn around. From next quarter or next to next quarter, there are some visibility. What I mean to say, there are some visibility down the line in another one quarter or couple of quarters. Start result or numbers will start uh, like expected performance will start getting reflected in the numbers. So that is the time point of inflection. That is the most preferred time for me, when I prefer to get into the stock, not on the basis of good display. A good display next quarter it may not do good, then what you will do, like you will come out. So every time you will get at the, you will trapped at the highest level. So that is not, that must not be the way of, or must not be the approach. I would say it's not, it should not be the approach. This is my understanding. I prefer to get into the stock when it looks good, maybe a turnaround. I'm not comfortable jumping into any running train. Anyways, so so far, largely the sector has underperformed, barring a few. Bear Crop had a good result, barring a few, I said. Godrej Agro had decent numbers, but Sumitomo down, Rallies was decent. Sumitomo down, UPL down. So, and this is, expectation from this agrochemical sector was not good for this quarter as well. Now, why? What is the problem? Basically, if you check the domestic market, there is a demand crunch. In the domestic market, agrochemical has a demand crunch. During the Kharif season last year, also the late monsoon created some trouble. Offtake was late. Some inventory was there in the channel. So altogether, demand crunch is at the retail level. So that is basically impacting the domestic performance. And as far as international performance is concerned, international uh, inventory, large inventory pile up globally is a big concern, and that's why companies who have overseas exposure are not doing well. Example, UPL has been facing problem in Latin America, in Brazil. There are inventory pile up in various destinations, in various destinations of Asia is also weak in terms of demand. So altogether, two types of problem. One is demand related problem, maybe due to uh, rainfall issues, winter rains, lack of timely rainfall in the Kharif season. So altogether, it impacted the performance by creating like due to the demand crunch. The domestic market was impacted, and international market is largely impacted due to the inventory pile up. So that is all for agrochemical sector. Now let's move into uh, another one sector. Let's take which one? Sugar we can discuss, but like big companies are yet to come out. Balrampur Chini result has not come, so it will not be fair to discuss. So cable companies, we can have a very quick check. Cable companies display was very poor. Birla Cable top line was down 19% year on year basis. EBITDA fell 29% year on year basis, and net profit fell 55% year on year basis. This is Birla Cable. Starlight Technologies top line down 30%, EBITDA down 63%, net profit down 167%, and Hindustan HFCL, Himachal Futuristic top line down 5%. EBITDA grew 31. EBITDA fell 31%. Net profit fell 14%. And EBITDA margin also squeezed 500 basis point at 11%. So altogether, all the three major cable players, mainly fiber optic players, has not posted good set of numbers. Now, what's the problem? Problem for Starlight Technologies, I know. Birla Cable and HFCL was doing good at certain point of time, especially after the uh, like after government put up some restrictions, put up anti-dumping duty on cable fiber optic import from Korea and China and Korea. So that was an opportunity for domestic manufacturers who manufactures both cable and cable fiber optic and fiber optic cable both. Related video, there is one related video as well, which you will be getting at the I button. Clicking the I button, you can see. uh, that actually as an played as an opportunity for certain players. Birla Cable was a major beneficiary. There was a stock price jump also, but Starlight Technologies was like being, despite being a key player, very renowned player, Starlight Technologies was like had a miss of this opportunity, as their main focus is in the North America, and North American market has, like, due to the interest rate going up, interest rate and going up inflation impacted the overall business scenario in US, and that is why Starlight Technology was badly impacted, and it has not been doing good for quarters after quarters due to the slowdown in US. And in the domestic market, companies were doing good, but now it may be saturated. I have not analyzed deeply, but overall performance is not good. Next, let's take a look at the hotel sector. Very interesting sector. Very there is a public interest in this particular sector for quite some time. Now, if we check how the performance was, the big player, the big boss, Indian Hotel, posted decent set of number. Top line grew 16% year on year basis. EBITDA uh, grew 23% year on year basis. EBITDA margin improved 200 basis point. EBITDA margin improved 200 basis point at 37%. Net profit grew 18% year on year. So altogether, Indian Hotel looks quite good in terms of its Q3FY24 numbers. Again, I'm saying it's not a buy, sell, hold recommendation. I don't have any view or any recommendation on any of the stocks discussed just due to its result. It's not the correct approach to take a call just due to 3 4 numbers. You have to understand how the future is going to pan out. This quarter result is good, next quarter result may not be good. So sustainability and the outlook, that is very important. ठीक है. So this was Indian hotel. Next, another one big player is Chalet Hotel. Posted good set of number. Top line grew 29% year on year basis. EBITDA jumped 46% year on year basis. EBITDA margin also jumped 500 basis point, expanded 500 basis point at 44%. Net profit also grew 21% year on year basis. So Chalet Hotel posted good set of number. Indian Hotel posted decent set of number, and small hotels also posted good set of number. Firstly, let me discuss Advani Hotel. Its number were decent. Top line grew 11%, EBITDA grew 9%, and net profit grew 6%. EBITDA margin was little under pressure, almost 100 basis point compression at the EBITDA margin has been witnessed in this quarter. But rest other small hotels have posted good set of numbers. Howard Hotel, top line grew 8%, EBITDA jumped 28%, bottom line jumped 37%, 500 basis point improvement at the EBITDA margin as well in this quarter. Another one, small hotels, Samhi Hotels, I'm not acquainted with these names. Top line grew 40%, EBITDA jumped 37%. Bottom line is still negative at 74 crore. And EBITDA margin, there is a little pressure despite 37% growth at the EBITDA level. EBITDA margin squeezed 100 basis point, or let's say compressed 100 basis point at 32%. So altogether, hotel company's result was good. Next one, we can have a quick look into the hospital sector. Although Apollo, Aster DM, like big names are yet to post their result, but so far a few companies where public interest is there, or let's say institutional interest are there. One such company is Krishna Institute of Medical and Technologies, Medical Science. So top line grew 8%, but EBITDA is a little under pressure, marginally down, 3% down year on year basis. Bottom line is also marginally down, 5% down year on year basis, and EBITDA margin compressed 300 basis point at 24%. Med Plus Health, top line grew 21%, EBITDA grew 28% year on year basis, and net profit grew marginally, 2% only. EBITDA margin stood flat at 6% year on year basis. Metropolis Health, top line grew 2%, EBITDA fell 8% year on year basis. Net profit also fell 24% year on year basis. So Krishna Institute and Metropolis Hospital posted little margin pressure, little small correction, let's say small degrowth at the EBITDA level. So altogether, hospital companies result, although only three companies result has been posted, and major players are yet to announce their result, but so far whatever it looks like, two companies are marginally down, one has done good. Next, I would like to have a quick discussion on chemical, specifically bulk chemical, because chemical is a vast subject. I will discuss based on the niche. So today let me have a very quick look at the bulk chemical sector. So bulk chemical, Gujarat Alkali is a key player in the bulk chemical sector. Its result is poor, horrible result. Top line fell 18%, EBITDA turned negative. Last year same quarter EBITDA was 238 crore, now it is loss of 20 crore. Now if you check for last 3 quarters, Gujarat Alkali is not doing well, and it's not the company to specific problem. All the companies in this particular domain is not doing well. there is a problem, a structural problem, or let's say, I would say, mm, across the domain, across the sector, all the companies are more or less impacted in the bulk chemical segment. Like let's take Gujarat Alkalis. Caustic soda is one of the key raw material, key product of the company, key output of the company. So almost 30% revenue comes from caustic soda. Various types of lye ore, lye flakes. So various kinds of caustic soda gives altogether 30% revenue, 30% of the like to the top line. Now Gujarat Alkali, if you see three consecutive quarters of degrowth, we will like we have witnessed at various level. Companies' performance is under pressure due to two reasons. One, first of all, uh, its top line is under pressure due to price correction of the key commodities. Like if you see caustic soda, uh, so I have soda ash price in front of me, and caustic soda price, I think it's not very different. Means movement, I'm referring, movement is not very different. So as caustic soda ash prices has have topped out, uh, and afterwards it has corrected a little bit, like off its high, and now it's within a range, but like as the raw material price has gone up, so expectation of the industry or the market is higher output prices as well. But our output prices are under pressure, and raw material prices is continuously going up, resulting in squeezing of the margin, losses at the EBITDA level. So Gujarat Alkali is has been suffering from this kind of market scenario. Bulk chemical, if you see other chemicals, H2SO4, there's sulfuric acid, is also in their portfolio, but altogether company didn't do good. Now I will discuss one another company of similar product line, that is Gujarat Heavy Chemicals Limited. Top line fell 28% year on year basis, EBITDA fell 59% year on year basis, and net profit fell 61% year on year basis. And if you see EBITDA margin fell to 19% versus 33% in the corresponding quarter of the last year. So if you take Gujarat Heavy Chemical, profit has been halved. If you take Gujarat Alkali, its EBITDA turned negative rather. Uh, so altogether, this sector, this domain is under pressure, and um, overall altogether, bulk chemical companies has posted weak numbers this quarter in Q3FY24. I'm not getting into other chemical companies, because again there is a subdomain, or let's say subset concept in the chemical industry, and if we can homogeneously treat this particular sector, that will give us uh, better understanding, more clarity. Rather than piling it as a chemical sector, it's better to look at it product wise. So chemical sector, or like the bulk chemical sector specifically, didn't do good in Q3 FY24. So in this video, that is all. I'm signing off. Please don't forget to subscribe my channel, and keep on supporting me with your subscription, and also look at my upcoming videos related to the quarterly result analysis and many other interesting market related topics. Thank you.